All right, guys, this is Simon Simaan, owner and broker of the Simon Simaan Group right here in beautiful Orlando, Florida. And today we're going to discuss, can you afford $1 million home? I'm with the mortgage guru. You guessed it right, Shahram Sondi with Florida Home Funding. We're going to ask him all the questions, what it takes to afford $1 million home. So without further ado, follow me down this really cool hallway with this nice art, and let's go meet the mortgage guru. Come on. Hey, Shahram, how you doing, man?
Hey, Simon. Good seeing you.
Doing good, doing good. So, all of our fans want to know, can you afford $1 million home? So, what's the whole process when someone's buying a home like that?
Sure. Anyone can own, buy $1 million home. Process is straightforward: credit, income, down payment.
Gotcha.
Typically, for high-end homes, you need at least a 740 credit score.
Okay.
You can go with as little as 10% down payment, but preferably the sweet spot is 20% down. Your income has to qualify you for the amount of mortgage you're seeking. Typically, they want to see you 45% or less of your gross income.
Gotcha.
So if you make $10,000 a month, your total monthly obligation can't exceed $4,500. Other than that, credit, income, down payment again. Bankruptcy, in Florida, anything over $548,000 loan amount is considered a jumbo mortgage. Typically, the lenders and the banks want to make sure that there's no bankruptcy or foreclosure in the last 7 years. Other than that, it's pretty straightforward.
So, how do the rates compare from like a normal to like a jumbo product?
Typically, the rates on a jumbo mortgage are maybe 0.5% higher than a regular conventional mortgage.
Okay.
Yeah.
So the more money you put down, the less risk for the bank, lower the interest rate.
Absolutely.
Gotcha. And what are the rates right now?
On a jumbo mortgage, without paying any discount points, you're probably looking at 3.25, depending on time of lock.
If somebody has a credit score less than 740, how can they kind of improve that?
Pay down credit card debt. If some people, the biggest misconception is people think that yes, they pay their credit card debt every month when the statement comes out. Well, by the time the statement comes out, it's already reported on your credit report. So if you're trying to make sure that your credit score is the highest, you want to always pay down your credit card before the statement comes out. So for instance, if the statement comes out on the 5th of the month, pay off the credit card statement on the 1st of the month.
Right there, we're saving you money and paying down your credit card bills. And then as far as like, the loan amounts, are there any max limits? I mean, as far as like financing is concerned?
There's not really any max limits. Once you start going over $2 million loan amount, you really want to deal with a direct bank because they portfolio those products. Under $2 million, you still have a good chance of getting a good rate with a mortgage broker or a lender. But anytime you go way over that, you want to deal directly with a bank. And the reason for that is sometimes the banks give you a much better term than a mortgage broker is because they are hoping that they get your deposits for your business and your assets.
I mean, the rates are so low that let money work for you. So you mentioned the 10% down. What does that look like, a 10% down on a house?
Well, the drawback to putting 10% down is you're going to have mortgage insurance on it.
Okay.
So obviously, if you're trying to avoid the mortgage insurance, you want to put 20% down. But sometimes, as you said, rates are still low. Even with mortgage insurance, your effective rate will be lower than what you could make in the stock market. So depending on what your long-term and short-term goals are, you may want to put 10% or you may want to put 30%. Sometimes you may want to put more money down because you don't want your mortgage payment to be more than a certain dollar amount. Some people are just, they just want to be at their comfort level, even though they make a lot of money. They just don't want to have a mortgage payment, for example, over $5,000 a month. Well, in that case, you just put more money down and work the numbers backwards.
Gotcha. Well, you heard it from the mortgage guru on Can I Afford $1 Million Home? It's all about good credit, healthy down payment, good income, and less debt. Hey, every home has a story. Let us tell yours. And if you like this video, make sure you like, comment, and subscribe. Until then, see you on the next one.